started off with the reason why compounding is going to be super, super important. How many of you out there, take my glasses off. How many of you out there have actually started trading and you noticed, I just made $20 today and I made $20 yesterday, and that seems to be it? How many of you are like dealing with it's a flat line effect, or either it's going backwards or it's not really getting progressive like you think? Anyone out here is having those issues, or is everybody progressing like they need to?
I certainly am not.
You're not what?
Not progressing like I want to.
Okay, all right. Well, we're gonna fix that.
I'll take 2 steps forward and 3 steps back.
Okay, and as I shared this morning, excuse me, when I shared with the class this morning, there's a lot of times that it's not you. It's not you, it's the brokers. You know, for a lot of times that you are dealing with brokers, it doesn't matter if it's Hugo's Way, FX Choice, it doesn't matter. Brokers are there to get money, and we are here to get money. So if that is the case, somebody's got to win. Somebody's got to take it full advantage. And so when we're doing our pippage in the morning, we're getting like 10 to 20 pips, you know, minimum in the morning. Catch it and go. Catch it, you know, pretty good setup and go. For some of the stories that I've been hearing, it's about, hey, I'm trying to go 80 pips. And when you're trying to go longer term, just understand what are you having going on in the meantime to catch up to those long-term trades that you got going on. So I wanted to really make sure that you are not overdoing it. You're sticking to a plan. And this tonight's part of the plan is really going to help you know how much you should be trading each day. Really, really, how much you should be trading each day. Okay. And then progress. You know, I don't care how long you stay in your demo account. You've got to make the determination. I'm here to stay. This is an investment train that's going to work, and I'm just going to have to stick through it and work it out. Everybody should have some kind of journal. Like my journal is damn near full. Every single day I journal activity, whether it's negative or positive. I'm journaling it because I got to see what am I doing. And if you're still in demo, that's fine. You want to be in demo and get the practice of doing that. So dollar store, get yourself a notebook so that you can journal every single trade that you have going on. Okay. Just pips. All right. All right. Let me get straight so y'all can take me seriously. But y'all will be seeing that hat again. Trust and believe. You will be seeing that hat again. All right. So for tonight, what I want to do is go over compounding 2 different types of trading. We've got regular Forex trading. Then we also have binary options. So we're going to do binary options first, and then we're going to go into what's going to be the best plan of action for traditional trading. Okay. Foreign exchange is what we are exchanging in both platforms. It's just a different style of trading, different type. So in binary options, you're able to take advantage of stocks, commodities such as silver and gold, and currencies is what you can do. If you have upgraded to the Hourglass platform, we're going to work off of that tonight, go through some examples, and then show how that money can be compounded so that you can really make money in minutes. Really make money in minutes, okay? But it really sticks to a plan that we have to really stick to. All right. If you guys have any questions, you can unmute yourself, and bathrooms down the hallway to the left, for the right for some of you. And just make sure if you have to ask a question privately that you ask it. And I'll get right back to you as soon as I can. So first thing we're going to do is we're going to take a look at the compound sheet for binary. First, how many of you are interested in looking at that, or haven't done it yet? Who hasn't done it yet? For some of you, I know over the last couple of weeks, you all have really been upgrading your accounts, trying to get the most out of what you can. Okay, so let's look at HFX. Let's look at that. I want you guys to do me a favor and throw an amount of how much you want to open up your live account with, or you want to see what is it going to take to double that. No problem, Gwen. When you're ready to open the account up, I'll show you exactly where you should be to open that up. In your back office, it's very simple. It's under personal info. And under personal info, you'll be able to upgrade to the HFX platform package, or you'll be able to do the Elite package. The Elite package gives you access to all 12 apps. Just imagine, I mean, I just train in the mornings on the harmonic scanner. That's one of 12. That's just one of 12. So if you want to have access to all that the company has so that you can dip in and out of several different platforms, you need to upgrade to the Elite package. When you do that, just understand the company is going to initiate it and activate it as of your anniversary date. So if you started on the 14th of whatever month, then if you upgraded it today, you won't be able to have access to the goodies of the Elite package until the 14th of the month. I don't know why the companies started doing that, but you're not going to have immediate access until your anniversary date. Okay. All right. So you guys do me a favor and start putting in some amounts. What are some totals? What are some balances that you want to work with on this example as we go through it, so that I can see what is it going to take to double it, to triple it. This is about you guys. This is about you guys. All right, 500. Feel like more in a game show. Okay, let's go for 5,000. All right, taking the retirement money, 5,000. All right, 1,000. All right, does anybody have 250, 100? Anybody have 250, 300? All right, let's start low and let's do 500. Y'all are already millionaires. You know that, you already know that, you walking into that. So we're not gonna do a $100 account, all right? I need you to think bigger. And these are some good amounts. These are some awesome amounts, but I don't want you to think small anymore. Let's focus on $500, okay? So I want everybody to focus. I know you have other things going on at home, but even though I am recording this, I really want to make sure that you are focused in on this information. This right here is going to be participation that's needed also. So I need to get some feedback from you from time to time. When we take a look at how much is it going to take to really grow our account, let's take a look at this worksheet here. You can find this sheet under resources under mytradinglounge.com. These sheets, both of these spreadsheets are under there. I want you to focus on the top part of this spreadsheet. You see where it says $500 at the top, where it says starting balance. You've got risk amount, payout percentage, the amount won, and the last column. These are the ones I want you to focus on. If we start an account, what I want to display within the next 10 trades, and making money in minutes simply is just that. If you are creative enough and patient enough to apply what I'm talking about. $500 is the start of the account. Within 10 trades, let's take a look and see how much can be made with the $500. So $500, guys, we should be risking no more than 3% on each trade. In the binary space, you're able to drop in a dollar amount of how much money you want to risk for that trade. You can put in $1, you can put in $3, but I don't want to see you do too much more than 3%. Say that, guys, 3%, 3%, 3%, 3%. And I mean for each trade should be no more than 3%. So I'm going to put in here, I'm just going to be conservative, and I'm going to do $10 for this one. Because 3% of $500 is $15, but let's act as if we got some sense here. $10. There's going to be an amount of money, and you're going to see it when we stroll over to Pocket Options, the broker platform. You're going to be able to see the broker is going to pay out a certain percentage to us, and they're going to retain some as well. So I just put in here 75% as a base median. You're going to see trades that are 60%, 55%, 80%, 90%. You want to focus on trades that are at least 70% or higher. That's the good zone. Okay. So I just put in here 75% as a median. This is how much you're winning, of course. If you won that trade, $7.50 would have been the win amount. Now your account is sitting at $507.50 after one trade. And I'm going to give you a trick. What I've been doing for the trade is I'm actually placing 2 trades at one time. I'm actually placing how many? 2. 2 trades at one time, because more than likely one's going to win, one might lose. So I put my odds in where I'm putting in, and sometimes you'll see that 2 may win, but 2 could lose also. So $507.50 is your new account balance. That's after one successful trade. Now, let's just say we now are keeping the money in the account. We did it again, but now we're risking more. This is the part of compounding that's going to take things to a new level for all of us. Because if you're just putting in $10 for each single time, you're not going to advance your balance at all. This is the reason why many traders are just seeing a flat line, or they're just breaking even, because they're not properly putting in the compounding effect. And that's what's really going to multiply the account. That's what we're here to do. We're here to multiply our accounts. So the next time you go in for your trade, once that's won, then you go back in and adjust the risk amount to $17.50. Now let's just say you didn't win that trade. You're going to stay at that same risk amount until you get to the next level. So let's say you lost that trade, this one here, and you put it in and you did not get 520. Well, then you know what I do? I would just go back in and I would put in the same risk amount again, or reduce it if you keep losing too many times, but just stick within the risk amount that you see here or lower. Okay. I was in a trade yesterday and I actually lost 3 back to back, but won 6 in front of it. So what happens is you just want to make sure that you're keeping up with the balances that is now in your account, because I shot up from 507 up to like 600. So if you do that, then all right, well, I've done that. I've exceeded the amount over here. Then I could start increasing the amount. $17.50, don't need that. $30, don't need that. I can move my risk amount up to $50 or $93. Okay, so what you're doing is you're watching your account balance, adjusting the amount for each trade upward. If you lose a trade, then you just keep the risk amount the same until you win enough trades to get back on track with the balances. All right, so we're going to see how that's going to work. We're going to do something in the demo account so you can take a look and see how that works out. All right, so how many trades is that really going to be? I don't know, because there's going to be some wins, there's going to be some losses. But if you take a look at this, we could take a chart 1, 2, 3, 4, 5, 6, 7, let me just say 7 to 8 trades, successful trades later, then you can at least double the account. Guys, we're looking at what can be done in one day. What can be done in one day? Let's forget all the $30 days. If we've got a strategic plan in place, then you can actually see how this compound is really going to help. I don't know, Dan, I don't need to change the risk amount because I just changed it initially on the top one. And then it automatically recalculated all the rest of them. So if I started out with $15, like 3%, then it just automatically calculates everything else. Okay, so look at this. 1, 2, 3, 4, 5, 6. Can you stomach putting in a risk amount of $246? Can you stomach putting in $430 as a risk amount? You got about $900 in there. But if you lose that trade, you're losing $430. It's going to take you wonk, wonk, wonk back to 5. But if you win it, then you're up to 1,200. You just gained $700 in one day. So you guys don't overdo it, but I was teetering around this area right here, going from $500 to $700, and then I just stopped because it's I'm not that one that's going to be like, all right, I'm going to risk it all. I'm not that one, because as much as you can win it, yes, you can still lose it as well. So you got to be mindful of all of that. So when you get this sheet on your own, you need to keep it up. You need to keep it up as you're trading. Print it out, even if you need to, because if you already know how much money you have in the account, what you started out with, print it out, go to work. Print it out, put it on your desk, because you might be out trading and you can't have the computer up. But if you, ladies and gentlemen, if you have this up at home, just minimize it and just start looking and see, all right, place that trade. And now you see every single trade, how much your risk amount needs to be. Is it impossible? No. You just have to have the guts in order to start here and finish down here to get 4,500. Okay? Any questions? Any questions? Any questions?
I have no question. So when we actually win a trade, say we won the $15 trade, okay, what we're risking, and I just want to make sure this I'm clear on this, we're basically risking $511, or what we're risking is at $15.
$15.
Okay, so that goes into that risk area. So whenever we win a trade now, we're bumping up to the 26 to 25, and so on and so forth as we go down the list.
Yep. Now you're being strategic about every single trade. You're increasing it little by little. Yes.
Okay, perfect. That's all I need to know right there.
And you got to have a plan. Like you may not say, well, I want $3,500 today. Okay, well, what if I just want $250 today? Then you're not going to be executing all of these 10 trades. You'll be done probably in about 5 trades. About 5 trades. If you did this successfully and everything went well, guys, you're going to win some, you're going to lose some. Don't get frustrated. But that Hourglass platform that we're going to look at, you've got a multitude of things going on that's going to give you a great high ratio to win. Okay, so now let's take a look over at the platform. Is everybody okay? You got questions?
Yeah, I have a question. If you go back to the worksheet,
Yeah.
that 123 in the risk column, what is that?
123. 123 risk amount.
Just below the 2.3.
Oh, you know what? I don't know what that is. When I got this form, that's why I'm not even focusing on that. I don't know what that is in there. Just look at the risk amount.
Okay.
Like, we'll take it out. Now you see it, now you don't. All right. Now let's hop over to Hourglass so we can put all this in action. Pocket option. Now the broker that I've used, it's called Pocket Option. PocketOption.com, and you can begin the demo account as early as tonight. And that way you can start to practice pulling the trades from Hourglass and placing them into this platform. All right, here we go. The easiest way to get into this software, it's super simple, is to go to hourglass.im. When you have the Elite package, it's already a part of it. Or if you have the HFX package, you have to add this on. You have to add this software on. It does not come standard with the HFX package. So let's look and just get a good idea on how we can place these trades with the best probable rate. Over here on the alert panel, you've got multiple different pairs. Multiple different pairs. I'm just going to take a couple examples just so we can apply the trade. NZD USD is calling as a put, so that means it's looking for it's forecasting the market to go down. The entry is the probable price where you want to click the button and be in the trade with that price. The time tells you how many more minutes it has before the contract expires. So just imagine that each of these are small contracts of time. 5 minutes are what these candlesticks represent. These candlesticks are all 5 minutes of activity. When this 4 minutes gets down, when it reaches, when this time goes all the way down, then we're going to look for a fresh trade and look to place it in pocket option. So if you take a look right here where the pricing is here, it gives you a countdown on time. So it's 32 seconds here. So as soon as this 30 seconds goes down, we're going to take a look and see what we can place. Now over here on pocket option, over here where the trades are, where all of the pairs are, the currencies, remember I was sharing with you, each of these have percentages next to it. And remember the percentage ideally is 70% or higher that you want to take your bets on. And it varies all throughout the daytime. So typically around 3 to I think 6 o'clock, these percentages change. All right. And they just do. So you're going to be looking for NZD USD is the first one, for example. We're just practicing. I'm not sitting here trying to get rich tonight. NZD USD, where is it? It's over here and it's paying out 50%. Let's go back and look for another one, GBP USD. It's calling for a call, GU. So you just want to get something that has a decent payout worth your time. GU's not even on here. Okay, we'll put it in there. It's at 50%. And it is calling for a call. 38.10. Price is now at 38.12. So I'm going to put it in. I waged $100 on this particular trade and it called for a call. So I'm going to put that in. I'm going to look for a second one. GBP AUD. There it is. And it's calling it as a put. I'm just following directions of what it's saying. GBP AUD put. So I've got both of those in there. Okay. And it's a 3-minute contract. So that means that they're going to be going up and down, up and down, up and down for 3 minutes. Okay. So we wait for that time. So in the meantime, let's jump back on this chart here. Well, let's just look at the account balance I had. I had in there in that demo account $9,500. $100. Those that have retirement, I want you to start taking a look at not pulling out all of your retirement. I'm not a financial planner telling you what to do, but I want you to start. This is the part of diversifying your income where you want to take a look and pulling money to make sure it's working for you. You have a lot of people putting money in stocks, cryptocurrency at this time, the foreign exchange market, real estate. You know, this is the time to start diversifying what you already have. You don't want to just put it into a CD or a mutual fund. Move that money around. Move that money around. All right, so here we're waiting for these trades to pop off. And because the percentage was low, let's see if it'll. We wait. We wait. We wait. So far, both of them are doing good. If you take a look on the chart, wherever you place that call or put, it's going to give you a line. And for GBP AUD, that was a sell. So you see where the red line is. As long as your price stays below that, you're in the clear. On GBP USD, I'm going to click on that one. That one was a call. The green line is right here because that's where we placed our price. And as long as price stays above that green line, we're clearing. So we wait. During these 3 minutes, what I'm not doing, done. What I'm not doing is sitting here looking at it until it like paint dry. I'm not doing that. What we want to get in practice of is at least putting it in and trusting the system that it's going to do what it needs to do. So that one trade cleared. I'm not sure why the time is off, but it did give us the trade and we won that trade. So we won $150. We won $150. $50 was the amount of profit. So we're waiting on the other one, 13 more seconds. Here's the red line. This is the
Hey, Lori, you're still on GBP USD. That's why.
Yes, I was. It didn't clear. One won, the other one did not. That's the reason why placing two trades is something that you want to get in habit of doing. So during your time when you are placing the trades, if you're able to do it, if you can stomach it, not a problem, but two trades at one time, because one trade is going to help you and two trades possibly, if they do take effect, that's even better. So then you're going to take a look at what is your balance and keep it moving from there. 100, and then you just wait. So I'm not going to risk any more than $100 until my balance has reached at least this 95.50 figure. So when the next trade that you put in, you're still going to put in $100 until you get to the point of 95.50. Does that make sense to everyone? Pretty clear? Just follow the risk amount. Just follow the risk amount according to how many, what your balance is. Question? Love to hear that word clear. So I'm going to change this back. I think the ideal time, I'm trying to still see the ideal times for the binary, but it's pretty good in the morning time. 70 to 80% are the pretty decent ranges for the payouts, So to recap here, when you're using Hourglass, wait for the time to get down to 0 minutes. Look for the trade to see if it's worth it for you to put in. If you take a look at Brandon Boyd's videos, Matthew Thayer is on tonight. You can definitely get your knowledge on. We're not going to go through a whole class of how to read the chart. But if you look and see, is GBP JPY a valid trade that you want to take? Make sure you're watching the time. Don't get in there when it's 2 and 3 minutes because it's in the middle of the trade. These trades are being called out at an ideal time, and that's the reason why there's a countdown. So get in with these. Keep your demo account open. Make sure when you're looking for the currency pair that you're looking to get into, make sure it's a decent amount. 50%, I'm just doing that because it's in our demo for right now, just practicing. But guys, 70% and above is ideal. All right, so typically over here. make sure that you're adjusting the trade amount for each trade that you go into. Keep the trade amount the same until you get on track with the correct balance. Watch your time. 3 minutes is ideal. 3 minutes is ideal. And then you're just going to hit call or put, call or put. Right? So that's it that I wanted to share with you on the spreadsheet for compounding. You use this sheet. It's on mytradinglounge.com under resources, and you can start putting this in, and please start using it for your trades. Please start using it for your trades. From now on, this should be a focus. Now let me shift gears and let's pull up the other chart for our Forex traders. For our regular trading, our regular currency trading, let's put a plan in place so that we can actually see our money grow. So instead of the investment amount changing, all that is we're changing here is just the lot size. It's the same thing. The lot size is what's regulating how much money that we're getting paid. So for this example, let's use $1,000. Another person had $1,000. So I'm going to change this amount to $1,000. Guys, our daily goal should be at least 8%. 8%. If you can capture at least 8% each day, you're doing fine. If you do more than that, not a problem. But if you can increase your account by 8%, I hope that makes you feel better that you don't have to walk away with $500 every day. Don't trip on what the YouTubers say. It's not like that. So at the top here, let's take a look and see. This sheet also is in the resource category. It's under compound interest. It's under compound. So let's take a look at the top here. We've got our day. We've got our balance. You can put in here whatever your balance is. You put in here your daily growth, your daily profit. And over here, we're going to focus on just a couple of columns. TP is your take profit. If you're getting 10 pips for profit, 20 or 30. And we're just going to stick in the middle with 20. And your stop loss, it's a little bit off, but that's your SL. So this is your take profit. This is your lot size right here. So let's focus on this column here. I'm going to change this to yellow. All right, so let's just say we are now starting out with $1,000. It's Monday, and you are on track to begin this plan for yourself. You could do this with the harmonic scanner. You can do this with levels. You can do this with if you're doing the Fibonacci, whatever trading style that you're doing, use this, print it out, or keep it up on your computer as you're trading. Let's focus on getting to 1 month of trading first. Let's get through 1 month of trading to see how much money can be made in 1 month. There's only 5 days in the week, trading days. So 5 days times 4 weeks is 20 trading days in a month. So we're going to pop down to where it says 20 and stop. Day 1, your account starts out with $1,000. Okay. When you get 8% growth, that could be anything that could have been from the harmonic scanner that we did that morning. Again, however you pull the trades, it doesn't matter where you got it from. Your daily profit goal was $80. Day 1, your goal was to get $80. Your lot size was $4. You see that? We're going just straight in the middle here. You can change this amount here, and you can do just about half of that. You can do 2.70. You can do 2.70 as your lot size. When you finish making your goal for the day, if you're following just this, you're done for the trading day. You're done. Now we can have multiple accounts. Hugo's Way, you can have multiple accounts. I think 7 accounts you can have with Hugo's Way. Most of these brokers, you can have multiple accounts. So what if you were trading one account for your retirement. One of them, the second one you have maybe is for your savings account. The third one is for this challenge here. The fourth one is just for binary. Well, it won't be in your phone there, but scrap that. It'll be for other trading platforms that you might be doing cryptocurrency. So you can do multiple accounts. So day one, you're done. Day two, you come back and you do the same thing, 8% growth. But the only thing you're doing here is you're increasing your lot size each day. That's the reason why your money is growing faster. If we kept the lot size at $4, you're not going to see this growth. So I just want to make sure that I'm instilling that in you. You can't keep the lot size the same for each trade that we do. So by the time you get to the end of your 20 days, you grew that account from $1,000 to $4,600. It's not going to be as streamlined like this because you're going to have some days that win or lose, or you maybe not trade at all. But what you want to do is stay on track. This is a 20-day cycle. If it took you 10 days to do this, awesome. These are days. The other spreadsheet that I showed you was trades. And if you go in here and you're actually going against it and you're just saying, well, I placed 5 trades today. That's 5 days worth. I did it this afternoon. Okay, you did it. You did it. You increased your account that fast. But just understand, follow the lot size here each day. And if you don't want to do that, then you can just keep repeating what is comfortable for you. If you get to almost 10, if you get here to $10 and you don't want to do this anymore, then just keep repeating what you have already done. Because some people get to $10 and they're like, nope, I can't stomach it anymore. I feel weird risking $10, excuse me, $10 and $20 for these trades because it gets higher. But the rewards get higher too. Look at the next month. You grew it from $4,600 now to $21,000. My biggest reason for showing people how to do this are people who are getting into real estate and need down payment assistance. They need to pay off a tax lien. They need to pay off student loans. This is the easiest conversation that I typically merge. I've been selling real estate, but the biggest conversation comes up. I don't have the down payment. Let me wait 6 months. And if you know anybody out there that has those same kind of conversations, oh yeah, I'd love to put my children in private school, but that costs money. This is the reason why you can advance faster. This is how you can get your student loan paid off faster when you have a plan in place. Questions? Sean, you made it. Welcome.
I'm here.
Okay. Let's take it down to 60 days. Now you're at 93,000, but it took you a lot size of $345 just about to make that happen. I want you to really just see the possibilities of what's in front of you once you just follow the spreadsheet. That's it. Once we follow this, then it's a little bit easier and less stressful than just going round and round and round in a circle. Okay. Anybody have any questions on these forms? Because that's about it for me. Officer Lori did okay?
I have a question. For your first trade, what amount are you risking in dollars?
For which
Like
one?
just say for the first day.
The first example?
Trade.
Okay.
Yeah, first example.
Let's go back there. Okay.
Oh, I'm sorry. That's the HFX compound. I'm talking about for the one with the 8-figure plan.
Oh, okay, let's go back to that.
Yeah,
Okay,
that one. Yeah.
okay,
Yeah.
what's your question?
Well, I guess what my question is, I probably don't see it, but if I do trade my first one, what percentage or how much money am I risking? So I think that I'm not getting it right now.
You're not getting what now?
As an understanding in regards of how much of a risk I'm taking.
So
Is it
let's not complicate that because that's different. So your risk to reward is still 1-to-3 ratio on whatever trade that you're doing.
right? Okay.
So when you win
Oh,
that trade, then you look at, well, my goal
right.
was to make a certain amount per trade. That's how now when you're about to place a trade and you're trying to figure out what should my lot size be, now you have a plan.
Okay. So it all determines of the lot size. Okay. Oh,
So
gotcha.
now you have a
Okay.
plan
Okay.
instead of just, hey, well, let me just put in 20 cents. When you really
Right.
should have been putting in $4 if you really were trying to make this happen, if you were trying to make it happen. Using the harmonic scanner in the morning, guys, when you're doing that, there are times where I can get 2 trades, and there's sometimes I can get 9 trades out of it. I can do what I need to do even by doubling up some of those trades. If you, let's just say the trades this morning, some of them weren't ready, right? I came back an hour later, placed the trade, it was ready. So one of the trades was enough where I didn't have to keep going. I would have gotten $80 just off of one trade. So in order to compound, tomorrow, when I come back, that same effort that I was going to do, all I'm going to do is just edge up the lot size just a little bit more.
Gotcha. Okay. All right. Gotcha.
Same work, but I'm just edging up my lot size.
Okay.
So you know risk to reward. We've been through that. We've been through that before. So you'll know, what do I need to do when I'm placing my trades? You do that first. But when you're about to place the trade, you got to know how much of a lot size is going to make a difference for you. Because if it's too low, then you got to put in more trades to catch up to that goal for the day. This could be one trade, y'all. Or this could be 3. That daily profit, it's up to you. It doesn't matter how many it is. Just make the goal happen. Just make the goal happen and then be done. If you go back in and you start saying, well, I'm feeling myself. I made $82 today. Let me go back in and do some more. That's when you typically lose it. So just be done for the day. You made your dollar, and just know at the end of the month, the next 20 days, 15 days or whatever, you've got the potential to stretch that account if you do it properly, just a little bit each day, to take that account from 1,000 to 4,600. That's like, if you can duplicate that every month, that's a housing payment and then some more every month. You can just keep doing this every 30 days. And that could simply take care of a lot of bills. That's $3,000 in there of profit. Y'all hear me in the back? Yeah.
Yeah, I got you.
All right. I'm about to sign out. I think y'all got it. About to go down here on the, yes. I've got a beat that I got to go take care of. So y'all have any questions? Wade, are you online? Nope. All right, so guys, in the morning, I will see you guys at 8:30. My harmonic scanner family, I will see you back at 8:30. Prayerfully, you have this sheet up so that you can follow it to determine what your lot size needs to be. Okay. Did you have a question, Mr. B?
No, I didn't have a question. I was just going to make a comment and say thank you once again for your dedication and the simplicity of the class in which you've done tonight. You've really
You're
shown
welcome.
everybody how to actually do this in a very simple way. And I myself am going to actually start working with the compound interest sheet for the HFX. So
Good.
on the other side.
We all
Awesome.
need structure. We all need structure. I don't care how old we are. We still need some kind of structure. So keep this up and it'll keep your trades much more really feeling like you're doing a business instead of just going round and round in a circle. So here is where we're going to find these pieces of information over on mytradinglounge.com. Check under resources, please. And you will find both of the spreadsheets that we went over today. The daily compound interest for binary is first, and the daily compound interest sheet, the regular one that we were going over, is here. All right, guys, I'm out. I will see you all in the morning. This recording will be up in another hour or so. So I'll see you guys on the streets.
Thank
Good
you.
night.
Profits. Flowing, I'm riding the mall. GBP, that is my goal. Count these pips. Ice on my wrist. I'm a young devil. DL Nation, stand up. This is what we do every day. Catch these profits. Here, nobody can stop us. We're taking over the world. I'm a young devil. Every little time I wait, every single time I'm paid. If you don't like the way that the BC trades, then you might as well get out the way. We getting paid. We getting paid. All about the profits, ain't here to play. In fact, the slave markets all day. All about this, all yeah, that is my like Mario Benders. T. Joe is the beast, go get her. See Don's fire, see Rob's the next. Yeah, killing every pip like a Kendra. Gotta give a million, it's render. Niggas get your hand off the trigger. DeLorean Nation going bigger. Pumping up the